So what I am saying that if we analyze financial statement of this company, last year revenue to current year revenue is less, but the last year cost to current year cost is high. Finance cost is same because the same loan amount and same interest rate must be there. The taxation depends upon profit is less, tax is less. On a standalone basis, the revenue is good, but the revenue has gone down, cost has gone up. It is a double-sided hitting. The revenue has gone down. Why? The major reason is the lithium prices. Lithium prices has gone down and the operating cost has gone up. Obviously, maybe we want to save the environment. Some research we are doing, which is increasing our cost, which should be reducing, but which is increasing our cost. Normally in operating cost, we say that since this is a fixed type of arrangement, staff in office in there, then the depreciation of the assets which are going to be used, all are maximum fixed expenditures only. So increasing the expenditure when the sale is going down should not be happening. But maybe because of inflation, the costs are increasing. Or maybe because of R&D we have done, the costs are increasing, but we are protecting the environment. But that is affecting our financial condition to a great extent. Earlier, we have earned operating income 3,3, now it is 2,741. If you look after the competitor financial statement, the same story is there. For the competitor also, competitor is bigger than us. They have better revenue, more assets. It's a bigger organization. But they have also revenue gone down, cost gone up. So we can see that this is the industry norm. Both the company revenue gone down, both the company cost gone up. Revenue gone down because the lithium prices are gone down. And why the lithium price is gone down? Obviously, supply is more than demand. For that reason, no increase in capacity required, which we have already decided. But then the lithium price is going down. Why? The question is that maybe small players are extracting lithium at a lesser level and they start selling. So maybe there is a selling pressure. Lithium is a quoted product in the market. It's a product where the prices are managed by derivative arrangements, by derivative future options, swaps and all that can be done. Why we have not done, or why that company has not done, or they are not able to control the prices is a question mark. The operating cost has gone up, maybe generally due to inflation, or maybe due to R&D activity which has increased the cost of the organization. Because operating cost includes manufacturing cost, admin cost, R&D cost, marketing cost, everything. Because then they have given the finance cost. The breakup of operating cost is not given. The finance cost in the other company is lower than ours. That means they have a lower debt, but we have more debt. So we are, you can say, more risky company than the other company. What is happening, man? Then if we go in the distribution of profit, then in our company, 1882 is the income current year, 1684 is the dividend paid, which is coming around 80-90%. 80-90% of the profit we are distributing as dividend. But if we compare with the competitor, then the competitor is giving 2649 to 1313, around 50% of the dividend. So who is better? They are paying out of earnings 50% of their earnings as dividend, and we are paying out of earnings 80-90% of our earnings as dividend. Who is better? We can't say like that. Paying high dividend is bad or good, we can't say. Yes, Adnanji.
I think it is a
It's a policy. There are dividend paying companies, they need to pay good amount of dividend. There are many companies who don't pay so much dividend. They invest money in the business only. We can say that we are paying, we means Rotomyne. We are paying good amount of dividend to shareholders. Maybe our past history is like that. Or maybe recently we have paid more dividend to attract the share prices, because the shareholder may not be happy. The reason being that the shareholder are not happy. Why? Why I am saying this? Because if you see the share price movement of the company. Then in 2019, it was around $4.5. Now it has reached to around $27 in 2023 approx. And then where we are standing, you will see that it is on 24 September, that is in last month, has reached again to around 7.5 something. What a lovely fluctuation in the price, you see. And it is reaching, that means the shareholder recently from 23 to 24 are not satisfied. Maybe from 21 to 23, they were satisfied, they were demanding, but there is a decrease in the price like anything in the last 1 year. Maybe because of environmental pressure, lithium prices, maybe the company's policy, they are not able to control the cost, the sale is going down, the return on capital employed, and all that adversely affected. So maybe because of that, the shareholders are not optimistic. And to maintain the price, the company is giving high dividend. But giving high dividend is also very bad. How you will grow your business? How you will be able to do more and more R&D? How you will be able to capitalize on the opportunities which will be coming in the organization? But to maintain the prices, maybe the dividend are paid more. The directors, the company management need to do something to maintain the share prices. We have not been given the price of other companies, only our prices. But these prices are saying it is very volatile. It's a risky business. And recently from 23 to 24, there is a major thing happened. Because the price was around $26, $27 and it has reached down to 7.5. Just like the original level in 2019, it is reaching to that level only. So the shareholders are not satisfied and the company need to do something to satisfy the shareholder requirement. Because in this period, 23 to 24, I don't find any share market in the world has gone down, whether it's India or whether it's any market. Recently, because of the war situation, but otherwise in the last 1 year, most of the world's market has gone up. India has moved much better. So it is against the market, the prices are going down, not performing well. If we look at the balance sheet, then in the balance sheet, the equity and debt. This is which company? This is our competitor. Our balance sheet, if we see, our balance sheet is equity is around 4,800. And the non-current liabilities is 5,000. So debt is greater than equity. That means it is greater than around 50%. And in the competitor case, 8,000, 9,000 around equity and 3,000 debt. They have very less. Our company is more risky than the other company. We don't know about their share prices, but our company is less risky. Our company is more risky. If we cover interest coverage ratio, 300 to be paid out of 3,454, which will be coming approximately 10, 11 times. If we talk of our interest coverage ratio, then our interest coverage ratio is around 5 times, 2,700 by 500, around 5 point something. So they have double interest paying ratio. They have 1/3 of the debt. We have 50% say other debt, and our interest coverage ratio is 5 times. 5 times is not bad. $1 I need to pay, I have $5, $6, no problem. Normally the norm is said as 2.5 to 3 is good. So we can borrow further money, but our financial condition is more risky than them. If we talk of return on equity, what is the return we are generating for our shareholders for our capital? The total capital is 4 plus 5, 9,814. 9,800 we are earning total operating income 2,741. Can you calculate 2,741 by 9,800? Not exactly, mota moti. 2,700 by 9,800. What is the percentage? 2,700 by 9,800. What is the percentage? Anyone? Around 28%, I think. Because if it will be 2,700 by 10,000, it will be exactly 27%. So 27,42,741 by 9,800 will be coming 28, 29% something. And if we calculate return on equity 1,882 divided by equity, which is 4,814. So 1,882 by 4,814. What is the return for shareholders? What is the return for shareholders? How much is the return for shareholders? $5,000 by 1,800 will be coming 36 at 37% approx. Na? The exact calculation I will be giving, I will be giving you. But if we go with these calculations for our competitor, there is 3,454 divided by 12,800. 3,454 by 12,800. Return on capital employed. 3,454 by 12,800. Return on capital employed. 3,454 by 12,800. And return on equity 2,649 by 8,800. Return on equity is 2,649 by 8,800. We can calculate the percentage and can decide and can understand what is the changes. Obviously, in our case, the major differences are not there. Both the company are moving in the same direction. Sales is going down, operating cost is going up. Return on capital employed is more or less same. I don't find any difference. And the return, maybe slightly whatever the difference is there, then our company need to improve on that. And the chances are there that the other company may acquire us. Or maybe we will acquire them. A small company can acquire a big company. Is it possible? It can. But I don't think so acquisition is on the card. Unless and until we want to increase the market share, we have surplus funds, then we can acquire. Otherwise, acquiring the other company, already when the surplus capacity is there, it is problem to sell the product in the market. Maybe for monopoly, maybe for having a better market share in the market and the funds are there, we can acquire other company. That's other thing. Otherwise, the whatever production we are doing, that is already enough to sustain in the market. If the other company has better operations, better management, then we can acquire. Ulta pulta kuch bhi de sakta hai. They will acquire us, we will acquire them, the valuation and then what is the business risk challenges, all those things, suitability, feasibility, acceptability norm, all these things can come. But looking at the financials, according to outset, not exact calculations, our company is looking slightly more adverse in terms of gearing, in terms of interest coverage as compared to them. And we can say that in profitability, more or less we are seeing. We need to calculate some other ratios also. Sales by assets, asset turnover, how much as sales we are generating from the assets. That also we need to look. Then we can say interest rate. I think interest rate is same only, 300 by 3,000, 10%. In our case, 500 by 5,000, 10%. So both have the same credit rating. But our company is smaller than them. And as we know about our company, the operation facilities is 9. 2, we are facing problem. The operational expenditures are increasing. So we need to improve on that. We need to do research. We need to work on those areas to change the field, because already the shareholders are dissatisfied. The prices have gone down like anything in last 1 year. So we need to see the strategic decision need to be taken in a proper way for the growth of the company, for the satisfaction of the shareholders. And when you go down, they have given some materials, newspaper clips. the adverse effect of lithium production, the different possibilities of usage of lithium. Then there are some persons who are working in the plant, how they face problems, how they can manage. Those things are mentioned in some newspaper articles. And the lithium prices are, you can say, market driven. They are not in the control. The company has a treasury department for managing the foreign exchange risk of 90 countries, the operations and the lithium prices. Because we have a treasury department who need to manage. What we are doing, we can see that there is a foreign exchange reserve also, currency reserve. That means we may be having foreign subsidy, foreign branch, something for the conversion of their assets or liability at the end of the year. There are some loss or gain that is there. It is notional, but that is part of equity. It is go on changing every time. They are not asking accounting part at a strategic level, but since they have given some figure, some basic understanding should be there. This foreign currency reserve, they will ask for management case study. For strategic level, they are not focusing on accounting part, but still, what is this currency reserve? Dividend payment. Then what is their opening balance? How the business is changing? That's, you can say, a financial analysis. मेरे हिसाब से, as per my understanding, the question will be on strategic directions for growth. R&D, operational efficiency, maybe some ethical issues relating to plant, relating to customer, relating to some business nature, the in political and uncertainty in some other country, maybe the sale of that business, maybe acquisition of each other, maybe acquisition of some small player. Then the question may be on corporate governance because they have a problem with the corporate governance. The non-executive directors are less than the executive directors. The corporate governance effects are there. And the executive directors or non-executive chairman is a part of audit committee and all that. Those problems are there. The corporate governance need to be improved because the problems are there with the corporate governance structure. At the same time, they don't have separate IT system. HR is there, but the separate IT director is not there. That need to be there because entire process is automated. Even for managing lithium storage and distributing, there is for inventory management, good IT system required. And for dealing with the clients, the IT management is security resources that IT required. There can be any problem with any debug, any problems relating to IT can arise. So we should have a separate IT system. So relating to corporate governance, change in the director, composition, the non-executive less than the executive, the committee structures, and the change in the directorship. That is corporate governance. Strategic decisions, takeover, merger, growth, internal problems, issues, and what do you say? Foreign exchange risk, because they have 90 countries, operations are there, how they will manage the foreign exchange risk, knowing about transaction, translation, and economic risk, and the method by which we can manage those risks. The interest rate, not so much is given, but whether the loan is fixed or if it is floating, but the interest rate remain constant. Going forward, how we can change the financial risk, how the funding can be done, from where the funds we will be getting, what is the source of funding possible, how we can grow our business. And if they want to create something bold from the blue, like the previous paper, which mock paper E, the MBO and all that, that is, you can say, extra thing asked. Valuation, mergers, acquisitions, synergistic benefits. When we sell some part, then somebody want to take over us. Then what are the way by which we can safeguard us? That is anti-takeover strategies. All these things can come. And our job is to do all those areas in the class. Our job is to cover all those areas properly in the class with different questions, with mock papers. What you need to do, if somebody has read the pre-scene, read once more. Somebody not read, read. Even though you are ACCA student, you think that this is your pre-scene also. Along with that, whatever I have given extra write-up, I have not opened my material because my write-up is more detailed. All is taken from somewhere, not my English language. I have done research and taken from different places what I feel based on the type of thing which you need to write in the exam. General common sense which you need to write in the exam. That way I have taken the material, because research can be done for 5 months also. But considering that type of question they ask in the exam, my entire write-up is based on that understanding. So that when you write the answers, you don't need to refer any other material. And at the same time, some technical part of valuation, mergers, or SFA model, or risk, or corporate governance, anything, whatever small technical parts that you can refer from this pocket notes for no further analysis from anywhere required. And go on writing the answers based on whenever I am giving you timeline, submit that. I will give you mark, I will evaluate you, and refer the model answers, work on your mistakes, work on your improvement. By that, you will be able to manage this. I will be sharing by 2 o'clock, maximum by 2 o'clock, some further write-up on the pre-scene and core area A and B, 2 sets of questions with a timeline when you need to write the answers. Not for Saturday, don't take tension. The timeline will not be Saturday, it will be later, but you need to submit. Once you submit, whether you submit or not, once the time is over, I will share the model answers. You will read the model answers, we will discuss in the class. Whatever the doubts are there, we will discuss once you start writing the answers and reading the model answers. And we will give exam after giving mock test from 10th of November to 20th of November. 10 दिन में mock test वगैरह देकर prepare करके we will be giving exam. Okay. But don't try to study so much on lithium production and all that. No point. If you work in a lithium producing company, then also not required like that. जितना दिखा है मैंने उतना काफी है. Basic understanding of lithium production, method, process, comparison between them बस. अब आप रॉक के अंदर नहीं घुस सकते. That is not your cup of tea. It will be affecting you adversely. You will see the Cima and ACCA website write-up. Industry analysis need to be done, but not overdone. If you do overdo, then in that case, main thing say you will be deviating. Your case is business and accounting aspect, not the manufacturing process aspect. We are not engineer or production manager, and we cannot become that. We don't have that knowledge. Okay, leaving for today, meeting on Saturday. Saturday का class इधर उधर हो सकता है. I will try my level best. I will not change, not keep in morning. That's guarantee. If इधर उधर होगा तो Sunday कर लेंगे. I will say. Chances are there. Maybe I will go out for 2 days. Not yet decided. Maybe. Not yet decided. If I will go out, then not. Otherwise, we will have the class normally. Okay.
Thank you, sir.
Yeah. Leaving for today. Thank you to all of you. Study hard.